All right, let's dive in. Today, we're going to crack the code on something that powers pretty much every single business on the planet: accounting. Now, I know it can sound a little intimidating, but I promise, by the end of this, you'll get the fundamental grammar of this universal language.
I mean, just stop and think about it for a second. Apple, or even just the coffee shop down the street. Every single sale, every supplier they pay, every employee's salary. How do they possibly keep track of all that without it turning into complete chaos? Well, the answer is actually pretty brilliant.
And that's the key right there. We're not going to treat this like some boring math class. Think of it like learning a new language, a language that tells the true financial story of any business. So, our first lesson begins with what is, without a doubt, the single most important rule in all of finance. Seriously, this is the bedrock. Everything, and I mean everything, is built on top of this one idea.
It's called the accounting equation, and its main job is to give a perfectly clear snapshot of where a company stands financially at any given moment. And the number one rule? It has to balance. Always. No exceptions.
And here it is. Looks pretty simple, doesn't it? All it's saying is that everything a company owns has to be equal to all the claims against those things, either from outsiders it owes money to or from the owners themselves. So let's actually pull apart what these words really mean.
Okay, so assets are simply all the valuable things the business owns. Cash in the bank, the computers, the delivery trucks. Liabilities, that's all the stuff the business owes to other people. Think bank loans or unpaid bills to suppliers. And owner's equity, well, that's what's left over for the owners if the company sold all its assets and paid off all its liabilities. It's the owner's true piece of the pie. So if that big equation has to stay in balance all the time, how do we actually do that? How do we record all the messy day-to-day stuff without breaking that fundamental rule? Well, this brings us to the verbs of our new language. The secret is a really clever system that was actually developed over 500 years ago. It's called the double entry system. And the idea at its core is simple but so powerful. Every single financial event always has two equal and opposite effects. That's how the balance is always maintained. Now, to track those two effects, we use two words you've probably heard before: debits and credits. But you have to forget what you think they mean. In accounting, debit just means the left-hand side of an entry, and credit just means the right-hand side. That's it. And notice how they're perfect mirror images of each other. A debit makes an asset go up, a credit makes it go down. A credit makes a liability go up, a debit makes it go down. This perfect opposition is the magic trick that keeps the whole system in balance. And this leads us to the absolute golden rule of this whole system. It's non-negotiable. For any transaction you ever record, the total amount you put on the left side, the debits, has to perfectly equal the total amount you put on the right side, the credits. All right, enough theory. Let's get our hands dirty and see how this language actually works in the real world. We're going to write a couple of sentences in the financial story of a brand new company. Okay, let's start with the best kind of transaction, right? Getting paid. So your business just made a sale and got $1,000 in cash. How do we put that into our new language? Okay, let's walk through it. What happened? First, our cash went up. Cash is an asset. To make an asset go up, we debit it. So we put $1,000 in the debit column for cash. But that's only one side. The sale itself is revenue, and revenue makes the owner's equity go up. And to make equity go up, we credit it. So we credit sales revenue for $1,000. $1,000 debit, $1,000 credit. The equation stays perfectly balanced. See? All right, next up. You gotta spend money to make money. So now your company buys $500 worth of inventory, but you tell the supplier, hey, I'll pay you next month. Let's break this one down. Your inventory, which is an asset, just increased. So we debit inventory for $500. But you didn't pay cash, did you? No, you created a debt, an IOU. That liability is called accounts payable, and it also increased. And how do we make a liability go up? We credit it. So, a $500 debit, a $500 credit, perfect balance. The system just works. Now, obviously, a real business has thousands, maybe millions of these little entries. So how do we keep it all organized? How do we turn this long list of entries into a story that actually makes sense? Well, there's a really clear flow of information. First, the transaction happens. Then we record it as a journal entry, just like we did. Think of the journal as a company's daily diary. But then, and this is the key step, All those diary entries get sorted by category into something called the general ledger. So all the cash transactions get grouped together, all the sales get grouped together, and so on. So, how do you know what categories you're allowed to use? That's where the chart of accounts comes in. It's literally just a big list of every single account the company has. Cash, inventory, sales, rent, you name it. It's basically the table of contents for the entire financial story. Okay, so we've recorded everything, we've organized it all, but before we can call it a day, there's one last crucial check we need to perform. We have to make sure our story actually adds up correctly. This is the moment of truth. This is where we prove that we followed that golden rule, that debits equal credits for every single entry we've made along the way. We do this with something called a trial balance, and it's exactly what it sounds like. We put our books on trial. You just list out every single account and its final balance. Then you add up all the debit balances in one column and all the credit balances in the other. If those two totals at the very bottom match to the penny, you've done it. Your books are in balance. That's the green light that lets a company confidently prepare its official financial statements for the whole world to see. And that's really the heart of it all. Once you master how these basic entries work, you understand the fundamental mechanics of how any business, from a corner store to a global corporation, records its own financial story. So now you have the decoder ring. You've learned the basic grammar for the language of business. A whole new world of information just opened up. So the next time you look at a company's financial report, you won't just see a bunch of numbers. You'll see a story. So, what story are you going to go out and read?